As India's financial landscape evolves, the need for investors to adopt strategic approaches to wealth creation becomes increasingly crucial. To help investors harness the potential of the Indian market, Groww Mutual Fund has introduced the Groww Multicap Fund. This fund aims to provide exposure to different market caps, helping investors tap into a range of growth opportunities within India's dynamic economy. To discuss how investors can effectively navigate this ever-changing market, we are joined by Mr. Kumar Gandhi, a seasoned financial expert with more than 20 years of experience in financial products distribution. Based in Mumbai, Mr. Kumar has focused on behavior management among ultra-HNIs and retail investors, helping them align their investment strategies with their long-term goals. In this conversation, Mr. Kumar shares his insights on multi-cap strategy, why quality investments matter, and how investors can stay focused on long-term wealth creation. He will also shed light on the key factors investors should consider while diversifying across large, mid, and small cap stocks. Please note this video is for educational purposes only and it's not a recommendation. Be sure to read the scheme information document carefully and consult your financial advisor to assess its suitability for your financial goals. Let's dive in. Mr. Gandhi, thank you so much for taking time out today and joining us for this conversation. First things first, I'd like to understand what exactly is a multi-cap fund and how does it combine investments across large, mid, as well as small cap stocks?
See, basically, as per SEBI mandate, the multi-cap is supposed to be have 25% of large, 25% mid, 25% of small, and 25% is up to the fund manager to decide how he wants to play. So the combined mix of all the three really makes a good sense and a good diversification of the stocks. So that really helps as a multi-cap fund.
So, why exactly should investors consider including a mix of large, mid, and small cap companies in their portfolio, especially when we're talking about a dynamic market like India?
See, markets is very dynamic. So maybe a year, if you take on a yearly thing, you may see large caps doing well. Some years you may see mid caps doing well. Some years you may see small caps doing well. So it's always difficult for an investor who has investment in say one or two funds to really get best of all the three. So that is the reason why these multi cap is a combination of all the three. So individual doesn't really needs to get upon asset allocation of equities in the right place. So this is automatically done on his behalf, and that really helps an investor to not bother much into which part of the equity it has to be, and that's why this dynamically it helps changing it automatically within the fund.
So, in what ways does a multi-cap approach essentially help investors remain responsive to the shifting market trends, economic cycles, and how the market, whichever way it moves?
25% balance is with the fund manager to decide. So he can really take a call as to where he wants to be. If the minor markets are in an uptrend or moving up, then he can really be more towards the mid and the small cap where the larger money can be made, or the returns can be made. And other way around, if the markets are really high, the valuations are high, then he can be more towards the large cap. So depending on the valuations of the market, depending on the valuations of the asset class, maybe large, mid, and small, it can be the portfolio can be managed in that way. So I mean, it is I think it's the best of all worlds. I mean, you can be wherever you want. So that's why it can really help. The diversification can help.
So, who stands to gain the most from it? If we talk from an investor standpoint, is it the new investors or the more seasoned, experienced investors from a multi cap fund, and why?
I think all of them help. It helps all these set of investors, especially the ones that suppose let's take a new investor. The new investor helps because he doesn't need to see where the markets are, where the flow of money is there, where the liquidity is there. So he just parks into this category of fund and then let the fund manager decide. And same thing for the old investor who's been there for some time. It's always difficult to move within funds also, large, mid, everything has a cost, like capital gains and all part of the thing. So it's let it automatically be managed by the fund manager within the fund so that it is more dynamically managed. And it helps all kind of investors, be it a new investor, be it an old investor, be it a small portfolio, large portfolio. And I think it's like an all season fund where one has to be there in the portfolio and it can really nurture the time coming ahead. See, this is going to be a very diverse portfolio. The universe is very large for the fund manager to select from. Like a 750 funds, I think if you add all of these together, there's around 750 stocks you can really review from. So it's a very diverse basket that the fund manager can look into and find the right stocks. So that's a big advantage that an investor has.
Great. But also, while picking out the right multi-cap fund, is there a checklist or are there any parameters to look out for?
The fund managers, how long has he been there in the industry, his past track record,
Hmm.
and especially see this in this kind in the multi-cap kind, the fund manager has to be have managed a small cap earlier or a mid cap, because that's where the really lot of work needs to be done, because they are under research thing. Unlike the large cap is
Hmm.
very well researched, so there's not too much of the fund manager has to work upon. So this is more specialized thing, and the fund manager with a good track record in the past can really manage things much better.
Well, great to know that. Thank you so much, Mr. Gandhi, once again for joining us and for sharing your insights and observations about the multi-cap universe. Thank you for joining in.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.